What do you think are some key things that some guys run into that are just good, easy eliminators, whether it's, feasibility, initial site, understanding what model goes where? Like, what do you think are some of the key things that people need to really be cognizant of on?
The biggest part is finding the right parcel, because a lot of mistakes that we see are a lot of groups, they go in, think they found the site that's just perfect for them, they overpay on it, then
they give away the frontage sometimes.
Yeah, I mean, that's, also, visibility. That's the biggest factor for these, is that you want to make sure people know where you're at. So if you push it behind a bunch of retail or restaurants and everybody's like, how do I get there? Then, you kind of blow it up right there on the spot.
We're back. Invest in Flexspace podcast is back.
We are back, brother.
You can't see Rivers. He's off screen, but he's here.
I'm a ghost.
He's here because we got his chair being occupied by the one and only Austin Edlemon, who, as we all know, is a good friend of mine, probably my best friend, but more importantly, a business partner who's been with me we've been together for a long time. How long? How long would you say? 7, 8 years?
6, 7 years now.
Yeah?
Yeah.
That's not bad.
Mm-hmm.
Yeah, there we go. Still going strong. And I told Rivers, I said, let's get him on, man. He's leading the charge here at the office. He's rocking and rolling. He's got so much great stuff working, not just here in DFW, but everywhere, all over Texas, all over the country. He's also helped leading the charges on World Engines, which is site selections all across the country. So when you want to talk about different areas, different sites, different locations, what's moving, what's not moving, he's got the better pulse than anybody. I always sound like I do, right? People kind of go, oh, Cody's got the pulse. No, I sound like I do. He actually does. So
I've been talking to the wrong
I get it.
person
Yeah,
all
you've been
along.
talking to the wrong guy. So, but no, he's very good. He's a very integral part and working on a lot of good stuff. So he had some time, and I said, let's get him on and let's see what he can help add some more value to some folks.
Love it. And of course, I've known Austin too here at the office, and we've had lunches, happy hours together, and he's always impressed me. And I am just so honored and happy that he's finally on the pod.
Yeah. Welcome, Austin.
Yeah, no, happy to be here. Thanks for having me on, and looking forward to having a good discussion today.
So why are you in the Flexspace business? I mean, what made you get into that? And don't say me.
Yeah.
I mean,
Well, when I started working for you, you were really pushing for this stuff, so I just followed suit.
yeah.
No, I mean, when I got into the business, I was doing primarily Dollar General, AutoZone type assets, and it becomes really repetitive. I mean, you're basically just picking up a phone, calling somebody, trying to get them to sell on the spot. And, if you miss out on that, you miss out. But when I joined up with your team, we basically were driving around, seeing a lot of these types of buildings and parks coming up online. And it looked interesting, a lot of good people that were building them back then. And it was more of a relationship game. You go out there, you meet them, give them advice, say, hey, you've got some extra land back here, you considering doing more units, or are you going to do some type of amenity back here where, there's a loading dock that your tenants can use? It was just very more streamlined, and a lot of these assets back then were, outlying markets in the county, the country, so those guys were just a little bit better to meet up with. You talk to them, hang out with them for a little bit, get to know them, and you could segue into their buildings more. But they just got more creative. Some of these were pretty efficient built, real basic.
There's most of them early on,
Yeah, dirt driveways and maybe a little gate up at the front to keep people in and out. But
that's what made us get SUVs.
Yeah. I mean, when I started working for you, I had that old truck, so I could take it anywhere.
Because the vet would bottom out in a lot of these, and I'm like, hey, we got to get this thing towed out of here now.
But, they just continued to grow with DFW. They started making the parks look a lot more better to bring in retail office tenants, so it was just an asset class that was on the verge of expanding as we were expanding as a team. Yep. So it just made sense to, kind of look into these parks specifically.
Nice. And so, Austin, I don't know if you know, also real quick, he is the co-author of Flexspace Domination as well. A lot of input in there with him, and a lot of time and nights him and I spent together on that thing. And
I was in the hospital when my son was born reviewing.
He said, doctor, I'm going to need a few minutes. Yeah, I said, doctor, I'm going to need a few minutes. All right, I'm on chapter 3. All right, chapter 3's due.
I got 15 more pages and we're good to go.
No, and so you know what I think would probably be good is, you know, one thing that we get a lot from a lot of people are, you know, first time developer mistakes and things of that nature. What would you say are some of the key things to look out for when someone's looking to develop small bay? We always say having the right team around you, obviously, right? That's kind of our motto here. But what are some things that you think people kind of run across? Because, you know, we had Tim on not long ago, who is your client, and we kind of rock and rolled with, and you know, they actually had a more smooth sailing than I think most people, and a lot of people do, and so, but they also had some really good guys around them and whatnot. What do you think are some key things that some guys run into that are just good, easy eliminators, whether it's, you know, feasibility, initial site analysis, understanding what model goes where? Like, what do you think are some of the key things that people need to really be cognizant of on as more people get into this space? And I'm going to move your mic up a little bit because I don't want people to think you got spina bifida.
Well, I mean, the main thing is your land parcel. You just have to, you know, go in and find a site that is right for this. You're not going to get a lot of pushback from the city if you're doing it within, you know, city limits. And that's kind of the biggest part is finding the right parcel, because a lot of mistakes that we see are a lot of groups that go in, think they found the site that's just perfect for them. They overpay on it. Then
they give away the frontage sometimes.
Yeah, I mean, that's also, you know, visibility. That's the biggest factor for these, is that you want to make sure people know where you're at. So if you push it behind a bunch of retail or restaurants and everybody's like, how do I get there? Then, you know, you kind of blow it up right there on the spot. But
you don't have to be on Main and Main, you know, as far as visibility goes, but I do believe, and I've always said, and I know you are too, your frontage, you really don't want to give that away. And that's been a big thing from a lot of smaller guys, because they go, I can make a little bit of money back by upcharging on that and selling that a little bit.
Yeah.
But I always say it's like a car show, and it's your car that you're putting at a car show. Your paint job is the first thing they see and the first thing they remember.
Yep.
Why give that away?
Oh, yeah. And I mean, that's, you know, it's really easy for them to say, hey, you know, if I sell off this to a QSR or, you know, a Dollar General site or something, I make my money back, no problem. And then, you know, you run into the hiccups of, well, I sold off that area, made my money back. What do I even need to build the remainder for? So, you know, but basically, you know, a lot of the groups that we've dealt with, they go in, buy something overpriced, and they get into the feasibilities, the environmental studies, and go have to deal with the city, and their costs just balloon right off the back. So if you're coming in and you're already overpriced, and then you continue to overprice, and then your rental rates may not be there to get the pricing you want on the inside, it's totally a wash. So that's my biggest thing, I think, is, you know, really identifying the correct parcel, what type of property you're going to build, be it, you know, efficient showroom, you know, premium stuff. You have to make sure that the rates are going to dictate the best use out there. And that's really, you know, somebody comes in and maybe they're 15 miles outside of town and they build a premium showroom with mezzanine park, and they're charging $25 plus nets, but nobody wants to rent out there for that because the guy down the street's at 10. So, you know, just making sure you're on the right track and have the right platform and know what you need to do in order to be the most successful for your site.
Are you a new construction guy, or are you an existing park kind of guy? Like when you direct people, do you like to send them to, and obviously it sometimes depends on the client too, but
yeah.
But your preference, do you prefer going and buying existing, maybe value add or whatever, stabilized, or do you really like the new construction side more? What gets you going more?
Right now, I mean, existing, you know, a lot of buyers are crossing over from different asset classes. Yeah. You've got guys coming out of multifamily, office, a little bit of retail. They're just trying to diversify, and this project, or the property types, have been so popular lately that we've just seen a really big push of buyer pool for, you know, flex parks. And there's so much value add growth on them. A lot of these parks nobody has really wanted to destroy a relationship with their tenants, because a lot of them have turned into friends. So, you know, they're not really increasing the rates, keeping up with expenses. Insurance and property taxes in Texas and, you know, across the U.S. have been going up drastically over these last couple of years.
Oh, yeah.
So, you know, you got to keep in mind that these are a business when it comes to it, first and foremost. And if you're not keeping up with that, then you're missing out on a lot of opportunity. And these investors will come in and, you know, pay really good price per square foot for parks that have a lot of value add upside. And, you know, I think that's where a lot of money is to be made right now in the industry.
Yeah, I think so.
You know, obviously we love new development stuff. It's just making sure you're on the right track. You know, you have a good general idea and understanding of what you're getting into and, you know, how we can assist in that as well. But yeah, existing right now is probably my go-to.
I like the existing side because, you know, I think there's so much, and just like some of that stuff we sold up north where, you know, the owner had owned it for 10 years, hadn't raised a rate in probably 10 years, and sold it to a new guy. And, you know, the same thing. He was friends with the people, didn't want to raise the rate, so we sold it to a new guy. And I love when the new sheriff comes into town and is like, y'all have had it too good for too long. Like, it's time to make some changes. And just start, you're now triple net. You're now double rent. Like, I like that kind of stuff. And so
I think that
that's
new
where
owner walked down with chaps and 6-shooters and just kind of said, hey, you're going.
Raising rent, get out of here. And so, but I like that. You know, that's I mean, that's the fun business aspect of it. I mean, that's why we do it, right? Because at the end of the day, these are investments. And, you know, I prefer that side, especially right now with interest rates and time. And if you've never done it before, it's just a great way to just go ahead and get in there. You got day one cash flow, even if it's maybe not as much as you would get after a construction build. It's still getting you.
It's a lot easier to manage. You know, you've got expectations that you already have in place, kind of know what you need to do. But with like new development, if you're not on the right track off the get-go, there's a lot of hurdles that you can run into. So it's just depending on what your investment strategy looks like long term.
So, and going on the new construction, because of all the world engines that you and me and Tran and everyone else is doing, what do you look for on new sites? What are some like key little indicators? In our world engines, you know, it's basically a site selection app that we use that people, you know, give us sites and we'll take a look at it and see, okay, these are the strong points for, you know, for small bay flex. Here's maybe some weak points. Here's some things to keep in mind. Here's maybe a tenant base that's really heavier out here. What are some key things that you like to see? Just a couple that you're like, man, I like to see that. I like this. I like this. Like, what are some key things that are really good drivers for you when looking at a new site?
The 4 things right now on these that we're looking at, because a lot of people are looking in very rural areas. You know, it's because land is so cheap out there. Maybe it's been in their family for years, or they just came across it and picked it up and they said, hey, well, maybe this is a good site for flex. And
my grandpa always said, what's always glittery ain't gold. So, you know, you got to keep that in mind.
Yeah, I mean, the land always appreciates. I mean, yes, but, I mean, for some
I can tell you some areas that it has not.
But, no, on the world engine models we put together, my primary indicators are population growth, household income, per capita spending, and, you know, just if there's rate growth within that market. So those just kind of show that a lot of people are moving into town. You know, there's affluent households that are going to be looking to utilize, you know, consumer-based goods or whatnot from these types of parks. So those are the metrics that I really look at. They show you pretty quickly if it's a red flag or not. And if, you know, the per capita spending's not there, then it might just not be a good fit to build something out there.
The area just doesn't have the money to pay the higher rent, to pay the higher service charges that maybe some of those guys will spend. Are there some key areas that you're kind of liking in the U.S. that maybe you've looked at that you go, man, this is a good little spot. We like this area. There's a couple that I looked at in Arizona, some in the northern part of Jersey. What have you kind of seen? I know you're real scattered across the U.S. on some of these.
I mean, you know, Texas is kind of the golden triangle right now. That's where a lot of this stuff is really showing good upside in the next few years. And with just people moving here, new construction going on all across the Metroplex, there's still really good pockets to get in. I mean, there's parts of Georgia on the north side of Atlanta, North Carolina has shown some really good opportunities, which has been kind of surprising because a lot of those markets are very new and, you know, I guess people just retiring, moving across out of state, wanting to get a new change of scenery. There's been some areas that we looked at even and we were like, wow, like you're getting these rents out here, no problem. And, you know, it's like, there's a lot of upside to that. So
yeah,
anything throughout the Sun Belt. I mean, you know, we've also looked at some sites in Jersey. You know, the East Coast is showing some good opportunity. You just got to be careful. I mean, insurance is being pretty competitive. If you're a coastal city, you know, they're going to either raise the rates on you or decide they don't want to, you know, pay for it. So
there's many areas where the insurance costs have exceeded the taxes.
Yeah, yeah. And, you know, when you see that, I mean, you just got to be super careful, mindful of what you're getting into if you do decide to move forward with it, or, you know, take our recommendation and maybe put out a couple more world engines for you.
Yeah, no, and you know, pre-marketing and things of that nature. I know Rivers is big on that, and he does that for some of his sites too. After he looks at it, maybe we do an analysis on it, then he goes and kind of does some initial pre-marketing as well, and that kind of tells you, you know, who's kind of looking. Also gives you a better clarity of the tenant base there, because if you got Rick's Body Shop only calling you, then you know, hey, we may just be in a heavier automotive area than we need to be, which. Let me just say something on that. I was actually having a great conversation with somebody the other day, and he's from the West Coast, done plenty of Flex out there. He's buying stuff out here off of us, and he was telling me, he goes, you know why I like Flex? Because he came from the car wash side, multifamily side. He goes, the reason I like Flex is because you always have that one tenant. If you ever struggle to lease, you always got that one tenant that you can go to get some money.
You know,
that's the automotive. Yeah, he goes. You know, I had parks in Phoenix and California, and a couple of them struggled to get tenants. And he goes, but when I opened it up and allowed some automotive to come in, he goes, I could always do that. And they could fill spaces, even if it was just for a short amount of time. He's like, sometimes and that's what we actually told a client on another project is, you know, if you're struggling to lease a little bit, why not let a few of these guys in, put good restrictions on them, short-term leases, get them in there, and then you can work on backfilling the space from there. And so, but yeah, he's like, there's not a lot of asset classes that has that one go-to that's an abundant supply.
Yeah.
And how many parks have we seen?
It's going to be there forever.
Oh, yeah. Oh,
I mean, there's always a new guy that's trying to open up a dealership or do something. And, you know, if you give them a chance and it turns out to be a great success, like those guys will, you know, always come back and say, thank you so much for letting us start up our business here and grow into what we are now. So,
and the body shops will always be there. I mean, I got a cousin that's wrecked her car probably 3 times this year already. So, like,
you can drive down the highway in DFW and everybody's got a door ding, they've got a bumper hanging off the side, and you're trying to swerve around them. So
we talked about them Nissan Altimas last time. Yeah, I mean, that's the king of the body shops, and so keeping those guys in business.
Yeah.
But yeah, he was talking about that, and I was like, you know, that is right. I mean, that is a go-to tenant that you kind of always have, and a lot of people don't like it because it's a dirtier tenant, and you know, can clog up parking lots, and there's certain key buyers that don't like it. But
you know, within that realm of auto users, there's also very good ones that are clean. They keep their spaces up to, you know, top-notch shape. Your wheel and tire guys, your stereo equipment, your window tenant, performance and spec shops, like those guys have a true business that they're running, and they want it to be a good entry and presence whenever clients come in to say, hey, I want that tuner to bump me up, you know, 50 horsepower or whatnot. So
I'd take that Chevelle to a Flexspace, to a speed shop that does LS tuning. And so very clean.
When you say the auto market for the tenant base, like, yes, it is a little grimier. There are, you know, body shops, and you don't want to do any type of mechanic work that's going to have a lot of oil spills, because if you do go down the road to sell a facility, like, you know, somebody comes out there, they see a red flag of oil splatter on the ground, then
been there.
But I mean, you know, a lot of people put a negative connotation on that entire group, where there are, you know, even down in Kennedale, like that guy that does the window tint, his space is, you know, gorgeous, like great looking space, you know, has his artwork on the wall and has 2 or 3 cars in the bay at a time. So yeah, I mean, with the auto users, you just, you know, restrictions, limit how many cars they can park, what amount of time, because what happens with a lot of those is you let them in, they put 10 cars out there, they end up sitting there for 6 months. And that's really the only big problem,
Or you'll be like, hey, I'll give you 2 spaces.
Yeah,
He's like, all right. And then next month now he's using 3. He's like, I'll get it out.
4,
And then next month he's got
5.
4. And it's just.
Then the car trailer shows up with 15 and he's like, oh, he's just picking something up as they're unloading 5.
Oh, I know. And so just like the wife, I'm like, hey, these Amazon boxes are piling up. And she's like, all right. And so I know she's having them delivered elsewhere right now. But yeah, no, I get it. As far as on the operational side, what separates, because that's one thing that we see, especially on these value add parks that these people go in to buy. What do you see is a difference maker between a good operator and a great operator, or a bad operator and a great operator? And I'm going to adjust your mic again. That thing's a little saggy, but keep going.
I mean, to be premier in this business, like you got to have a good relationship with your tenants. You got to let them know up front and expect like, hey, really like you being here, but this is my operation. I have to keep up with the changes in time, economic factors. So it's just,
Easy there.
Yeah, you're coming in close. But, it's just having a good relationship on the tenant side and making them aware that, hey, like things are going to change in the marketplace. Things are going to go up. Things are going to go down. I'm going to have to adjust, rates accordingly to keep up with that. If you're not doing nets, the ownership's taking on a lot of the expenses. So it's like letting them be aware that the operational side of this can fluctuate.
Yeah.
And you got to let them know that, because, if you get in the situation where the guy comes in and you set him at $5 a foot and then nothing changes, and then all of a sudden you try to increase him up to $9 a foot, it's going to be a tougher conversation than if you kind of introduce it up front. And, if they're a good tenant, they stick around. A lot of the tenants at these units, like they make this a home base and they stay put for years if you treat them right and fairly. So, I think that's one of the key factors, making sure your park's clean, not having, broken panels, trash piling up in the dumpsters, litter scattered throughout the parking lot. Because, these tenants are making this their home and they want it to be a good space. They've got clients coming in to visit. And, those are like the biggest thing that a lot of these guys say when we go around on, site tours and we're talking to them is like, I haven't been able to throw anything away for 2 weeks now, so
we've been to some places with a lot of dumps.
Yeah. So it's like, you gotta understand that side and make sure, they're comfortable, like the property, and, have things that they need in order to do good business, because that's going to keep you well occupied, as well.
Yeah. I'm going to give you a scenario, okay? I give you unlimited money. What do you build? What type and where?
I mean,
I hope it doesn't flood whatever market you're about to say.
Yeah. I mean, just being in DFW, a big fan of North Tarrant County, in between Fort Worth and Denton. Alliance, was a really big master plan community that has just kind of continued blossoming through Justin, North Lake, parts of Argyle, really good school districts and, nice homes going into that area. So, I mean, that would probably be one of my top choices, and I mean, I prefer the showroom model just because it has an ability to pull tenants from different product types, so maybe do some with showroom with really nice glass up in the front that showcases their business side, and then have the warehouse space in the back, and maybe do some with mezzanine. I like that concept. It just gives tenants another opportunity to utilize that space for, more offices, more inventory storage. So probably something like that.
Yeah. I like parts of myself, Georgetown, and even areas out there, if you can get as close to Austin as possible, but and Kyle, right? Not the person, right? But the city. I think there's some really good opportunity over there, and you can build, good products and capitalize on the growth of Austin, which I think is going to continue to explode and continue to grow out there. And it's a little bit different economy out there than up here in Houston, but their rates are doing very, very well, and they benefit a lot off the entrepreneur network, tech, very heavy, and the tech side, and
Samsung, Tesla down there.
Everybody's going down there.
North Austin's great, and I mean it's kind of the same thing. Like, it's just going to keep going north, and those pockets like Georgetown, Hutto's taken off as well.
Oh, yeah.
Parts of North Cedar Park areas up around there are really expanding as well. So, I mean, yeah, the growth is very similar to like a North Tarrant County market, far north Dallas, Melissa, Anna, Prosper, those sites. So, I mean, there's very good similarities between those areas. Yeah.
Nice.
If I may jump in here, I wanted to go back to what you said, Austin, about mezzanine. So what, and this is probably a question for both y'all, but you love mezzanine, and that just kind of allows somebody to have extra office or storage. How do you look at mezzanine how do you utilize the space?
So, I mean, that's just going to be all up to the tenant, you know. Okay. You could do whatever you want with it. We've seen people that, they have their showroom downstairs and then they put their private offices for their secretary, the owner, their employees. I really like that because that gives you more coverage on your warehouse floor.
That's right.
But a lot of the guys too, they just say, keep it as is if it's a spec space, and they just, have a level up there, and they're like, hey, this is great. I mean, I've got all this stuff that I need to hold on to until I go to sell it or whatnot, and I can put it up there to keep it out of the way.
Okay.
So,
and on the mezzanine, do you recommend developers to build a metal mezzanine, kind of alongside with the pre-engineered building, or do you want to do it with regular wood studs and box it out, actually have it closed in, because I feel like. And maybe I'm using the term maybe too broad.
Yeah, no. Well, it depends on the use and the tenant base and the quality of construction as well, right? So there's plenty of them that have mezzanine space. It's really, I don't call it mezzanine space. I just call it two-story because they've got it loaded with office. Some of these high-end units, right? And so that's a very different base than maybe when on the subcontractor side where they're storing certain materials, parts, or equipments for maybe different seasons, right? And that keeps it off the main floor area. And so each one's a little bit differently. If you're more of a subcontractor base, I do like it out of steel. I'm not really a big fan of the wood stuff. I just think it
doesn't last as long.
It just looks better too.
Keeps it clean.
Yeah, and but it really depends on the quality of product that you're putting out there, because the higher end stuff, and there's plenty of it, right? That guy that we know out there on the west side of Fort Worth, building those nice 2-story flex spaces. I mean, where the ground floor's beautiful, real nice, can be for a showroom, gym, whatever, and then the top is all sectioned out into nice private offices, conference room, things of that nature. I mean, that's the higher end. There's a lot more office space there. I mean, they're probably encroaching. They're probably coming up to 30-40% of office space into those kind of buildings. But their rates are high. They do very good. Those tenants can be very sticky as well. But then you're also dealing with a little bit more TIs, tenant improvements. If and when that tenant leaves, there's usually a little bit more cost to that instead of, just handing me a broom and I sweep this thing out and we go on to the next guy. But there's really no rule of thumb that I know of on that. It's more building quality and area specific. But I know if you're more infill in town, you can, depending on that area, you can do a lot more office. That's where you'll see a lot more office. Yeah. Obviously, stuff that's more rural, that's going to be not even 10% office.
No way. That's going to be a large storage unit for the most part.
But those guys do. Some of those guys do love the mezzanine space, and they look at it as additional area, additional square footage, even though you can't really sell it on it. But
it's just nice to have it as an option. If it's the right fit for the area, it's a lot of premium, high end parks surrounding you, and maybe they don't have it, but then you come in and offer that. Yeah. Then people are like, hey, I really like this over something basic with just like a 30-70 office warehouse breakdown. So,
and I always like having it in a few units.
You don't have to do it for the entire facility if you got like 85,000, 100,000 square feet of units across your park. But I mean, if it's something where, just a few buildings, you go in and have it for prospective tenants, like it just gives them some extra to say, hey, this could be a better fit than something just normal.
Yeah, but I always like, if you're building a park, if you can, go ahead and build a few with it. Oh yeah. Do it on the ends. That way it's never in the center. So if you ever expand somebody, it's not just sitting there out in the open. But I do like having those options.
Back to the mezzanine. Y'all know I've got some
questions
about that.
Hit me with it.
So the argument that I've heard specifically from you, Cody, is that you cannot count the mezzanine square footage. So is it one of those deals if we put a second story, like I think we talked about a property that we have under contract right now off of 35, the highway.
Yeah.
Pretty exciting deal. And so our plan is to rip the current building down, put a pre-engineered building, 2-story, or potentially a mezzanine. And that's where I want to clear up the air. Are we calling it 2-story so that we can count it as square footage? How do we need to finish it out differently where we can count it as square footage versus a mezzanine? So is that kind of the trick word here? 2-story, sheetrocked, kind of finished out.
Yeah.
Okay, now that's a second story. We can charge premium, a little bit more for the square foot when we sell or when we lease. And then mezzanine is a little different because it's open.
Yeah.
And maybe could be more considered as like a storage, like a almost like, the warehouse that they have kind of the stacking.
Yeah.
The stacking, what do you call those?
So no, I agree with you. So if you're doing, multiple offices on the second floor, and you've got a good office setup up there, I mean, that's square footage that you can add. But if you have a restroom over here and you got a stairway going up to it and then a platform over it and it's just there, that's just mezzanine space. You really can't add that on. I mean, people try it. People do it. I'm not saying you can't do it. When you go to sell it, nobody counts that. I'll tell you that.
Yeah.
But
it's usually never included.
It's easier to do that whenever you are actually doing true second story usable space.
Right.
Right? Because mezzanine is more storage than anything. It's rare that we ever see anybody actually using it as nobody's just sitting up there in an office, unless maybe you got a foreman sitting up there in a little
overlooking
little
his,
Walmart desk
site,
looking at people. But the true 2-story, you can add that square footage on to the lease because you are going to be charging a lot more for it. And so the last thing you need either is, showing a $40 a foot rental rate on 1,200 square feet when you actually have 2,400 square feet or, something of that nature. So it does, once you get past the more storage point, you're now getting into the usable square footage is what we call it. Usable and rentable square footage.
And we will be doing a official second story because we feel like the offices upstairs would be great.
Yeah.
Bottom, you can kind of do more of a showroom style.
Yeah.
And the back would be the warehouse.
And I got a great model I'll show you afterwards that somebody we're working with did that looks very, very good as a 2-story model.
Nice.
And I like it a lot, and they bring really good high rents.
That's like Spring and Tomball, some of those areas on the north side of Houston. A lot of that's popping up down there. And I mean, it really good looking product. And they are commanding top rate rents for the area.
Oh yeah, no. And and some of those guys you're getting, sometimes high credit tenants well, much more than the local. Sometimes you're tapping into the regional and even sometimes national guys that are leasing from you. And so
because like lawyers, title companies,
design
roofers,
firms,
design, marketing, those guys, they're like, hey, this is close to where my employees live. Like, this is great. So they're more willing to go into a unit like that than a premier office building in a downtown setting. So.
So does that answer your mezzanine?
Yes.
Did we answer mezzanine? What do you think? Now my mic's doing the Austin Edlemon shuffle here. What do you think? So we got the next 3 to 5 years. What do you think we're going to be seeing in the space? I mean, I feel like every day we're getting multiple calls from multiple different organizations, real estate funds that are from other asset classes, right? Like how often do you turn around or I turn around or one of the other guys turns around and goes, hey, just talk to
so-and-so out
Storage
here
Daddy or whatever. And, they now want to get into it. And so,
I mean, the potential over the next few years is going to be very fun and interesting to watch. Some of the bigger firms have started looking into this stuff as well. And I think that's key because, they're starting to blend some of the big box tilt wall industrial, larger flex units that are 35,000 square foot in space size. And they're saying, hey, we started with the 100,000 plus 200,000 square foot plus units. We dropped into this 30 to 50,000 square foot range. Like, why don't we capitalize on these, 15 to 2,500 square foot units? So I think there's going to be a growing interest in institution players to look into this asset class a little bit more closely. Developers from the storage side, historical flex operators that are just looking to expand and brand their parks and grow that side. I think, it's going to continue growing across the nation, and more and more people are going to find their way into it.
So we sent Tran to
Inside self
Las Vegas, to Las Vegas.
Viva Las Vegas,
Viva Las Vegas, and a place that I love. And sent him out there. He went to the self storage expo, and I mean, came back with
stacks of business
stacks
cards.
of people that are coming from institutional side, higher level real estate fund side, like even higher private side, and they're all like, how do we get into it? Can you start showing us? We want to buy existing.
What do you got that we can look at?
And a lot of these are existing buyers, which is good. That's really good for the new developer guys too. You know, you've got these guys coming from these asset classes. We had a great conference call last night with another multifamily fund that's also kind of going to start diversifying, and so you know, you're going to see, I think you're going to continue to see a lot of people coming into this airspace and really, you know, hunkering down and taking a lot of the existing product off, because, you know, new supply has started to slow down a little bit. I think a lot of that's due to, you know, tariffs and economy and things of that nature, and pricing and, you know, making sure that you can get the rents and things of that nature. But, you know, I believe it will start picking up again later this year. And so, and that's why we have people taking advantage. We never had this before. And I know you and I talk about it all the time, but, you know, when Tim was here and, you know, was talking to Rivers about, you know, basically them pre-selling it before it was, you know, fully leased. We never, before this year, we never had anybody doing that.
No.
They were always building it, leasing it all the way up, and then sending it to us to sell. Well, because they're able to capitalize on it, there's so many guys that are building it going, hey, I'm almost done with it. What can we sell it for? And then we'll give them a number and we'll show them, hey, you can sell it for this now or this stabilized. And they'll see that number and they're like, let's go. Like, I don't have to wait for it. Like, that's a really good profit. That way I can sell it and maybe build another park. And so that's one thing that I've never seen before really until here recently. And I mean, that really speaks volume to the impact of it and the amount of people all over there looking into it. Yeah.
I mean, I think that's really key because, you know, historically it was always just 100% occupied, or at least 90% had some value add upside. And that's what a lot of the buyers then were looking for, was just something that was at or near stabilization, but they could go in and, you know, clean up some of the units, bump some of the rates. But yeah, I mean, to see people that come in, look at a park that's 30% leased and, you know, needs a lot of work to get it up to stabilization, like that's a huge indicator of how many people are just looking at this across the board, and, you know, that they're willing to take that on and get it up to fully stabilized. I mean, I think that's
the only time I'd heard that before was on the storage side.
Yeah,
people buying storage facilities before they were built. You know,
Yeah.
a good friend of mine, Brian, you know, he was building a boat and RV facility, and somebody approached him before he was even done, saying, "Hey, we'll buy it
we'll
as
take
if.
it.
Let's go."
You did all the research that said this is a good area. We'll take care of the building part.
He didn't even have a single RV parked in there, though, Austin. I mean, that's an incredible risk. But you know, if you also do the research and, you know, get a good feasibility study that says that, then you know, that tells everything. But that was a big indicator to me, because we're working on 2 more right now that are still in development stages, and looks like they may be selling before completion. And so that tells you a lot about the buyer demand out there.
Yeah.
So something to continue to think on, and, you know, could be a good opportunity for somebody to come in and get something at a lower basis than they would if it's stabilized, to, you know, pick up.
They can
continue doing the work,
make
and
it their own, and, you know, add in a little bit of flair here and there that they like and what they think will be the best fit and use. So, I mean, it's a great potential and upside on those guys.
Nice. Awesome. Well, no, I appreciate you coming on today. You got any other questions for our boy?
I love it. That was great.
Yeah, I appreciate it.
All
Had a good time on
Did
here.
you? Look at that. Yeah, you did good,
Y'all keep
man.
it interactive and exciting.
Yeah,
so.
no, you did a good job. So I appreciate you having us. I appreciate you coming on. And, you know, we got another event coming up. What date is that? July 10th?
I think so.
July 10th. Hopefully this goes out before then. July 10th of 2025.
Yeah.
Because it's currently May 2nd, I think. So July 10th, we got another event coming out.
Yeah, it's gonna be fun.
We'll have Rivers out there and a bunch of other folks on the Flex side who are interested in it and want to commingle with other guys, and we like putting those on. And I think this one we're gonna have a couple people present as well, some projects that they're building that maybe they're like, hey, who wants to be an investor in this? And so I'm gonna work on getting Rivers to maybe do that with one of his projects, possibly. Maybe we'll see if he'll do
be
it.
the first one up.
Man, yeah, I'd love to.
Go bring your checkbooks. That's all I gotta say. Bring your checkbooks.
Yeah,
the suitcase of money.
Yeah, we'll do that. But no, appreciate you coming on. And
no, thank you very much for having me.
Always look forward to these. So thank you.